just for those that maybe are unfamiliar with the concept of the secondary, the idea is you've invested into some private investment, whether it's real estate, maybe it's a private REIT, or it's a true, private investment directly into a property or a fund. You're willing to take a discount to what you invested because of you need that liquidity for whatever reason. So then you try and go find a buyer to basically replace your capital in that investment. And the broker-dealer in that scenario historically was the kind of market maker, the middleman, kind of creating that transaction. Is that pretty accurate, or kind of clarify that if it's a little more nuanced?
Yeah, that's exactly right. So you differentiate in the alternatives world between a primary and a secondary market. So primary is that initial fundraise that a fund does to bring new capital on. And many times they kind of identify what is the exit strategy, and maybe it's going to be 5 years or 7 years, or maybe there really isn't an exit strategy. And so sometimes, people get to the point of, they've owned something for 5 years. Well, there is no exit in sight. And so they're saying there's an opportunity in something else. And so I'm looking for liquidity. And again, we're not a buyer. We're not a seller. For us, we have a very large buyer network. And so for the most part, when somebody says, I want to be able to sell something, if it's already on our marketplace, chances are we already have a buyer or buyers lined up making bids.